What's up, guys? This is Ruben from TGE, and in today's video, I want to show you a better tool than the MACD, a better tool than the RSI, because essentially all those tools just tell you like when is the right time to be entering a trade, when is the right time to exit a trade. Okay, I'm going to share that with you how I do it. Okay, by giving you an example with Costco. We traded Costco yesterday. We got a 38% return. Okay. And it wasn't even close to our price target, but we already got a 38% return. We took our money and left. But I'm going to show you how we created our thesis to go long on Costco to get the optimal entry and how to set optimal price exits. Okay. And I could have gotten a lot more in this trade if I would have gotten further out. So just to make sure I don't get shaken out with the current volatile market. But let me show you how we got the entry and the exits, okay? Because this is amazing. Costco just hit the weekly expected move, and it's already Tuesday. Okay, let me show you the chart first. Here's Costco. Let me move this line now. You see this WEM line? This stands for weekly expected move. This is like a realistic price target that has a 70% chance of hitting based on Gextron's mathematical formula. Okay, so you don't even have to do the math yourself. Gextron is going to give this to you. It's going to show you what's the expected top, and also you can figure out the expected bottom. I don't think I marked it here. Maybe I did. It might be this 924, but this is the expected, right? This is what could be expected based on price action as of right now. Okay, so how did I make this? How did I figure this out? This is your ideal price target area. Where's the optimal entry? And this is called the P-trans level, okay? So here's how this works. Gextron, before I enter a trade, I go to Gextron and I ask it, where is P-trans? Where are we in the spectrum of this chart, okay? Where are the big bars? Whether it's to the downside or to the upside. And where is price? And so what I like to do, this day is a little bit different because today's April 1st. Happy April Fool's Day. And this is the data as of right now. Yesterday was a little bit different, as in where the P trans is. I can already see N trans is 535 here. Yeah, sorry, 935. This was P trans yesterday. Now it's changed a little bit. But here's what I was seeing. Okay. This was a positive number. Right now it's a negative number right here. You'll see it right there. If I hover over it, it says negative, but it was positive. And that was the start of a positive transition to a bullish thesis. Okay. And so, with that being said, when I saw price here heading towards 935 with volume, right, is bouncing and it's got strength, right? Big strength. As this told me something. This told me, okay, we're going to try and get above P-trans. And we're going to set some price targets here. I had this 942.33 area. I said, this is a good price target. As we were heading with strong demand, I announced the Costco calls, which was a 38% return. But before I got in the calls, I also had to figure out where is the optimal entry. It was around this spot right here, 935. This is where we got the calls, around this area, as it was just crossing over. And then the perfect exit was this WEM line. What does this stand for? WEM stands for weekly expected move for us inside TGE Max. We like to get the weekly expected move for the week because this expiration ends on Fridays. So we want to know what are realistic price targets for the week for this given security, for this ticker, for Costco. Okay, and it's really easy to do with Gextron. So first thing is first, right? Figure out P-trans. At the time, it was 935. That was the start of a positive transition on the number, and then everything was bullish. And then I had to figure out the next big spike bars, right? Which was 950, and then we have 980, and then we have 1,000. But I was just focused on 950. So I marked 950 here. 950. This is MR, but it wasn't a max reward. This was just an area of interest, big spike bar, right? Big wall. Okay. Then I need to figure out the weekly expected move. What is the option price what is the option market pricing Costco to have the weekly top and the weekly bottom? Okay, and it doesn't mean that Costco can go higher than this. It did try to go to. It can go higher, or it can go back to the weekly bottom, or go lower. But at that point, that's just supply and demand. Okay, but this range that Gextron gives me, this has a 68 to 70% chance of hitting for the week. It's very unlikely for Costco to be ranging in the middle. It's going to get near one of these areas. So let's take a look at how I figure this out. When I look at the market, I like to go to the Alt tab here. It's not an Alt tab, it's an expiration tab, because it shows me all the available expirations for Costco in this case. And it's categorized by months. And then I look at April, because today is April. And I look at April 4th. At the time, this says EM. EM is just short for expected move. At the time, this was about 29 bucks or something like that. And then all I did was grab this number and I added it to the spot price. That's it. And I got the number 954.70. It was very, very precise, very specific. And I also like to subtract this number to get the weekly expected bottom. So if my thesis goes from bullish and it goes back to bearish, I know what's a realistic price target to the downside. I'm not going to get blindsided. I'm not going to pick a contract that is too far out of the money that's never going to hit and get theta decay. Okay, that's not what we're trying to do. If you're trading out of the money contracts, you want to get an out of the money contract into the money as quickly as possible. And this is the way you do it. This is how we do it. And with ease, we don't have to figure out key levels. We don't have to figure out what's an ideal price target. Gextron does that all for us. It does all the heavy lifting for us. So, with that said, as price was heading here, crossing over P trends, we took the calls, okay, because it was strong demand, high volume, and then that's it. Around this zone right here, I think it was around 1108, maybe around here, just a little bit higher. We sold around the 940 put, around the 940 price action level, and we got a 38% return on Costco. We called it a day. Get out of the calls. This is a weekly. We don't know what can happen, right? And you can see here that this was a good zone because it started to retrace a little bit here. It started to struggle. It's struggling to get here. But as soon as demand started to pick up around this area, right? Then it went to the area of interest, 950. It went to this wall. And then it was strong enough, demand was strong enough to go to the weekly expected move. And as we're seeing right now in the market, the week is not even April 4th. Price action is struggling to hit this above weekly expected move. The point is that it hit this weekly expected move to the top. That was a good price target. I could have done a much better job trading this if I would have gotten maybe 3-4 weeks out. That way I'm not shaking out with the market. I'm not being shaken out with this or theta or whatever the case is. Okay, it was just that simple. Now I'm going to show you one more example, and this is all live. This is happening right now. Earlier today, I marked the levels for SPY. SPY is pretty much, the day is almost over, like half the day. It's 1:30 p.m. Eastern time. And I got the daily expected move. I always mark the daily expected move at 9:45 Eastern time when the data is fresh. And the price for SPY to the top was this DEM. Just like the WEM, weekly expected move, this was daily expected move. You see, so price was around, where's the Tuesday today? Tuesday, it's right here, somewhere here. Okay, so this is where we open. This is the first 30-minute candlestick. The weekly expected top was 562.05, and the weekly expected bottom was 552.01. Very, very specific. Same thing. Get the number here, add it with the spot price, and that's it. Gextron is taking into consideration implied volatility. That's what makes this powerful, because implied volatility, by definition, is a forward-looking metric. What is the forecast for SPY, right? What is the option price? If it goes higher, again, that's just the power of supply and demand at that point. If it goes lower, okay, then it stays within range. But if it goes lower below DEM, the bottom, the daily expected bottom, again, that's just supply and demand overpowering this range. But this, you can see here, that it hit the weekly expected top, or sorry, the daily expected top, and it's rejecting perfectly. Okay, and now we are below 560. So what this tells me is like if we can stay below 560 on a 30-minute time frame, which is a pretty happy median. I think the hourly is good too. Okay, it can potentially go back to 555, and we'll see how it does here. And if it loses this, then it goes to the bottom, to the daily expected bottom, and then maybe even max pain 550. But if this can sustain, then it can go back up. This will be a resistance zone, and so on and so on, right? These are key levels being given by Gextron, and we don't have to do any of the thinking. We just let Gextron do the thing and let it tell us what's the expected move for a specific date. And all we have to do as traders is mark those levels, have the map, and just let volume at that point tell us, give us an actionable signal to be able to take a trade either to the upside or to the downside. And that's it. That is Gextron. That's how we traded Costco today. So if you have any questions or you want to try out Gextron, I'll leave a couple links in the description box down below. And yeah, book a call. There's a 7-day free trial. It costs you nothing. Risk free. Peace out.